friends, this is Martin from Secrets, channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the markets during the day and see how we can plan for a better trade tomorrow. Right, and this is analysis for November 12th, Friday, tomorrow 2021. Right. So what happened in the market today? Today was an expiry day, weekly expiry, and it was a big sell-off once again that happened in the markets, and indices, both Nifty and the Bank Nifty, hit support zone once again. Let's look into that. Meanwhile, if you're not subscribed, please subscribe and share it with friends so that it benefits all of us. Thank you so much. So we would be looking at the pre-market analysis for November 12th, Friday, based on all of these parameters that you see on the left side. That's all the charts, and additionally we'll analyze the volatility, sectoral watch, and global commodities, open interest, institutional participation, all of that, and wrap up with some actionables, right? So this is the price action. What you see on the left side is the Nifty and the right side is the Bank Nifty, and you see a bearish candle here further down, right? Bank Nifty also a bearish candle, but the wick size is longer because it did bounce from a support zone. It's currently at a support zone again, understand. This is also at a support zone. So that's what 144 points the Nifty lost, close red with the longer wick candle, and the 18,000 support is gone, and even 18,850 support also was breached. Even 800 support also was breached. Right? Bank Nifty also lost 1%, bigger loss, nearly 463 points lost, and then formed a longer wick bounce kind of candle, bearish candle, and actually it retested the support. This was tested, last week, and it was tested once again this week. Okay. Intraday option was a gap down. Nifty, Bank Nifty both gap down. Nifty consolidated after the gap down, but Bank Nifty was trending downside. You can see that, right? A gap down from yesterday, then tried to consolidate W pattern, kind of attempted to recover and go up, and then succeeded almost near to 879. But here it was trending down. Last minute few candles afternoon it had a bounce from the support zone. That's what happened, right? So this support zone is the retested zone, the retesting of the Bank Nifty, right? So Bollinger Bands, if you see, this is what happens, right? You can see that the upper Bollinger Bands and lower Bollinger Bands is moving sideways instead of moving upwards. That means it's consolidation for multiple weeks. Same here, bands, contraction of the bands are started, and this is the band moving average, 20 moving average. So indices slipped from there and then could not regain or close above it since the last 4, 5, 6 days. Here Bank Nifty also had a good support, took the support multiple days, lost that, slipped that for since 4, 5 days, could not close above that. Support and resistance level, Bank Nifty, it gave up the 18,000 support, then took the support of 1850 and closed above it. It in fact breached the 17,850 and in fact breached the 17,800 also, and then bounced back and closed above the support zone. So the next resistance would be obviously 18,000, which was support earlier, and only after that it can go to 18,350, 450 levels, which is a Fibonacci projection level. So if that is gone, then it can slip down to a previous swing low, which is also very close to the Fibonacci 23 retracement levels, which is 78,600, and it will be a retest of the previous support. So if that slips, from there also, if it slips, it goes to 17,450 levels, and then that slips, then it goes to 17,300 levels, and then it slips, it goes to the 17,000 rounding number level. Right? That's on the Nifty. Right side Bank Nifty, what happened? It had taken a support at 39,000, which was Fibonacci 23 retracement, gave up that and slipped from that, and now it fall back to the 38,400 kind of levels and took support and bounced, and then now the support would be the same. The 38,400 would be the first support, and then if that is gone, then you have 38,000 support, and then that is gone, you have 37,800 support. Upside, the previous slipped support of 39,000 will be the first resistance, and then the resistance will be 39,500, then the resistance will be 40,000, then 41,000. So all previous supports now turn as resistance if it has to move upwards, right? So that's Nifty and Nifty. Bullish demands we have already seen. Momentum divergence weekly, bullish reverse divergence where momentum is coming down and the price is moving up. That is already there and it is confirmed also, but we don't know whether it will materialize to move further up or not, but it is still valid. It's not negated. Now daily momentum, you can see that it is sideways. RSI is dipped further in the Bank Nifty also. So Bank Nifty and Nifty both momentum on the short term is lost, but higher time frames momentum is still in the bullish zones. And the weekly you have the bullish divergence on Nifty also. Trend indicator ADX shows still the DMI negative is dominating on the Nifty and DMI negative, so it's bearish on the short term. But Bank Nifty and Nifty are bullish, still on the bullish zones on the weekly time frames, and also the strength of that Bank Nifty's weekly time frame. So ADX strength is showing that it is rising up. So lower time frames both are bearish. That is what ADX is saying. VIX, you can see that it stayed flat, more or less the same. 16.3 level is maintained. IVP is 15.3 and 34% is more or less the same flat volatility today. Open interest data is showing that the expiry of 18th November, so no traded days are yet to come from tomorrow, so this open interest data may not be valid, but the levels that would actually reflect and make sense more from tomorrow onwards only, right? Because that is where the new expiry week starts. So as of now, the Nifty has 17,500 and 7,400 where the maximum put rating is there. 18,000 and 19,000 is where the maximum call rating is there. Bank Nifty 38,500 and 36,000 is where the supports put rating is there. And 43,000 and 39,000 is where the call ratings resistance is in. 0.57, 0.64 is corresponding to Bank Nifty and Nifty's put call ratio, and the short build-up is what is in the futures of. So it's all bullish in general, but the levels cannot be matched with the charts because it makes more sense from tomorrow onwards, because this is for the 18th November expiry. Sectoral performance, all sectors perform bad. 0.5% IT down, metal 0.5% down, auto 1% down, pharma 1.5% down, FMCG 1% down, reality also, which is bullish, 2% down, auto also bullish, that is also 1% down. So all sectors down, bearish. And momentum also short term is bearish. You have to wait for that to catch up. Institutional participation is a concern. Fyers have become big sellers once again. 1,600 crores sold today. Till yesterday they were selling less than 1,000 crores each day. So 25,000 crores of selling has happened in October. November also they are turning out to be 5,000 crores big seller. But even the DIs also bought only small, 445 crores. They have been buying but smaller quantities. But domestic foreign institutional participation is very bad and it's a concern. Yeah, so there is big news on the dollar side. The dollar index has broken out, as you can see. It's a major resistance zone of 94.7 level is breached and it is breaking out. I think dollar is strengthening much further. And USD-INR currency pair also seeing that the rupee is further weakened, where the dollar here also the dollar value is strengthening, and you can see that it has come back, taken a support at the previous support from where it has fallen off from. But you can see that it is an indecisive, very strong kind of pattern. So there could be a reversal tomorrow, or there could be a consolidation from here. It may not further go up to 75 plus 76, that kind of levels. May not happen is what the candlestick of today is indicating, and the momentum is already lost. But the dollar is strengthening because of some economics factors of tapering and and yield value. And all of these reasons, the dollar is strengthening, and obviously rupee will also see the corresponding pressure to some extent. Now, good news is that the crude oil has fallen off below 80 after so many days, but still it is at all-time high levels only. Not all time, but a multi-year high level, right? So that is some slight good news that the dollar surge has lost the momentum. But look at gold. Gold is breaking out. It is broken out of the handle patterns, the cup and handle weekly, and a major resistance also taken out, and it is heading towards the major support, next support zones of 1876 onwards. There is the resistance that is there, so it is going to take out there. It is going attempting to, so it's bullish, and breaking out is what gold is doing. Markets are showing green after some reds yesterday. Yes, markets are all showing slight green, but European markets are also showing green. So we'll have to recheck and revalidate this whether any big moves upside or downside has happened, and whether it is reflecting on the SGX or not tomorrow before the market, pre-market. Right now, we'll see. So, actionables, no changes in the actionables. Muthoot Finance is doing good, and we saw that there is a box pattern, good volume and momentum breakout, and trend also up. And patterns for the daily and the weekly both looks good. All time frames, momentum and trend is great. This is housing development finance. So it had taken a dip today, but still for a personal trade, this seems to be good, as although it has slightly lost the momentum. So you have to be cautious to have the stop loss just below this neckline. Right? But otherwise, there is no long trades available today. Since the momentum for the indices have breached, trend also has breached, and all the sectors are performing bad today. So, the backup is that there is moderate bearishness. The reason is that the chart is speaking to you and telling that it is bearish. It is unable to close above the previous day's close since the last 3 days, and 18,000 is a big support that is lost today. And it in fact breached the supports below that also, and then even breached 17,800 or so once and then bounced back. So chart is clearly showing momentum is weak, and on a short-term basis everything is weak. Chart also short-term it is showing that it is bearish. So we just have to be bearish. Now resistance is below the 20 moving average Bollinger Bands. Median is also a worry. It is flip-flop that, and then it is never regained that. Unless and until it climbs above that close, we cannot say that there is bullishness. Now foreign institutional participation is really bad, as I said. It is a real concern. They have been selling big, and they continue to sell in November month also. Now the only hope is the bullish reverse divergence on the weekly candle, which can still work out, right? So it can get bought at the support levels that as it goes at some place, and then can bounce back. We never know that. The last two paragraphs are repetition on the volatility based options trading. So basically the volatility range is at a higher level between 15 and 20, and it is hovering between that. So it's highly volatile these days. Intraday spikes and V-shaped moves are very often, and therefore use calendar spreads for volatility spike benefits, and then vertical spreads instead of naked spreads, buying or selling. Right. So this is a wrap. I hope this helps you to form your own view and then have a good trade plan for you yourself tomorrow. If you like it, hit the like button and share it to your friends, colleagues, and so that everyone benefits. Thank you so much. Happy trading and happy learning.